Inflation is up, way up, and interest rates are up. Is it time to panic? Let's look at it from three perspectives: buyers, sellers, and real estate investors. Before I get into the three different perspectives, let's talk about what has happened in the past 2 years. Who would have thought a pandemic would result in skyrocketing real estate prices and high inflation? Governments printed a lot of money to prop up the economy, and central banks took on bond buying and cut rates to prevent the bottom from falling out. Unfortunately, signs of persistent high inflation were ignored in the fall of 2021. I believe the federal government and the Bank of Canada should have started addressing inflation back in late fall 2021 and not wait 6 months till now to slam the brakes. Yes, I am being critical of their slow reaction, but I digress. Let's look at the home seller's perspective. Well, I have bad news. The days of 20 to 30 offers are pretty much gone, with a few exceptions. There will be multiple offers depending on the type of property, the location, but a lot less. Also, expecting buyers to throw money like it was 2021 is a thing of the past. There will be friction moving forward as sellers' expectations will need to adjust to market reality. Pricing your home according to market conditions moving forward will be extremely critical. For home buyers, there are good and bad news. Well, the bad news, the cost of borrowing has increased, but it's not that bad. For example, let's say you have a mortgage of $500,000, which will cost you 1% more than it did last year. 1% of $500,000 is an additional $5,000 of interest per year. On the flip side, less buyers' demand means less competition. Less competition means less chance of getting into situations where buyers have to overpay by hundreds of thousands of dollars. And this goes back to the case of 20 to 30 offers, and now it's a lot less. Here's another example. If a buyer can buy a house for $100,000 less due to less competition, an additional $5,000 of interest annually is not a bad deal. Now, for real estate investors, it's good news. There is less competition if they're looking to acquire properties, and more rental demand as some buyers will be pushed out of the buyer's market. Here's why you should not panic. Definition of a balanced market is 3 to 5 months supply. This would happen if one or three of the following take place: massive layoffs, immigration comes to a halt, spike in the supplies of homes for sale or being built. For layoffs, it's possible if companies look to cut costs as consumers spend less as the interest rates rise. With respect to immigration, we have approximately 400,000 immigrants, new Canadians coming to Canada, and about a third end up in the GTA. They do need homes to live. With respect to supply of homes, it takes about a year to get permits to build one single family home in the city of Toronto. Supply will never catch up unless there are some radical changes to the way government reviews and approves home building, which in my opinion is highly unlikely. Am I optimistic? Yes. The last 2 years have not been good. 20-30% appreciation is not sustainable and very bubbly. 6 to 8% appreciation is healthy and sustainable due to jobs, immigration, and supply shortage in Toronto and the GTA. My advice is to think long term. Keep calm and carry on. Are you on the fence and not sure how to move forward? Feel free to connect and I'd be more than happy to help. And until next time, happy investing.